So this is going to be a 3-part mini series of just some tips, not tips and tricks of getting a mortgage. So the first one is for first-time home buyers or people trying to make a purchase on a home. You want to make sure that you have 90 days history for your down payment. Banks, lenders want to make sure that that money has been sitting there for 90 days. This is also on gift letters that are typically above $100,000. They're going to want to see 90 days history. So make sure that you have that prepared before you engage with a mortgage professional like myself. Second of all, we definitely have to make sure that your application is completed in full. We want to make sure that you have 3 years job history. Your employment will need an employment letter for the application, most recent pay stubs. You will have to make sure that I can pull credit, right? And those are some of the most important things, along with what your current liabilities are. So if you have a boat and a car on your liabilities and you owe a significant amount of money on those, that's going to impact your affordability, right? So approximately a $400 car payment is going to allow you to qualify for $100,000 less of a loan amount. And thirdly, I want to talk about the different types of insurance. So there's kind of 2 types. If you are a homeowner, there's homeowner insurance, and that's a policy if you are moving into the home. It's going to cover your belongings, and there's different policies that you can select, right? And that covers things like your watches, maybe you have some precious metals in the home, computers, all your belongings, right? So you want to make sure that you have a insurance policy that lines up with that. Talk to your insurance broker. I don't sell insurance. And you can also get insurance for a rental property. So if you're buying a property and it's going to be an investment property, you're renting it out to an individual or a family, you need to have basically tenant insurance. So it's an insurance policy that the landlord has, but it is to cover yourself as a landlord, right? So it's not covering the belongings, so it's different, right? Protects against liability. Someone slips and falls and they are trying to seek compensation for that, you're protected, right? So those are kind of the 2. Now, I'm a mortgage agent. I don't sell insurance, but those are just a couple tips and tricks. Cheers. Thank you.